Welcome back to Everything Money. We're glad you joined us again. In this video, you will learn about Facebook, Paul. They've had some trouble in the past couple weeks. We will look at the financials behind Facebook, see where they're sit in terms of, we will take our software, our exclusive software, to look at the financial statements to see where they're sitting with their numbers, what they're doing to you as a stockholder, and that will transfer into whether the stock price is affordable, undervalued, overvalued. All of this we're looking right now. If you're interested in trading Facebook, we'll head over to Trader Mo with the charts, and he'll show you how to trade this at a quicker pace. But first, who are we? Why? What is this channel? Paul, you and I started this a few years ago. It's me bringing your normal person questions to a couple wealthy guys that trade a gazillion dollars in stocks. They own real estate. They own businesses. And I have had a chance to learn from them over the past 3 years. And you will too in this video right now. We're going to take a look at Facebook. Paul, this is an interesting company. I know we were interested in, how would I say this? You liked this. Most of our stocks are a no, Paul, but we were close last time, and now they've had a rough couple weeks and beaten up a little bit. So we'll have Mo tell us about the charts at a quicker pace. But Paul, tell us about Facebook in general as you introduce yourself and your suaveness.
Okay, welcome everybody. First off, follow us on Instagram. We have a new Instagram account, and then follow us personally. It helps us out a lot. So guys, Facebook is a company. I like scandal around companies because now I'm hearing we need to split up Facebook. We need to do all these things for Facebook. Same thing they said about Microsoft back in 2000, right? Or late 90s. I like scandal because scandal tends to run stocks down, right? We'll look at more of the financials here shortly to see how much we like the margins. So first off, we go to our exclusive Everything Money software. We hit the 8 pillars tab. We type in Facebook. Very simply, go to Facebook. So to start it off, Facebook is an $867 billion company, market cap-wise. Our first pillar, we want the 5-year earnings, 5-year PE, which is the current market cap divided by the earnings of the last 5 years, to be under 22.5. It's 36.7, so that's an X. But don't worry, guys. Remember, the higher the growth rate in the company, the higher the PE you should be looking for. And Facebook is still growing its revenue and profit immensely. So I'm not as worried about this one. Pillar number 2, return on invested capital. We want it to be over 9%. We look at the 5-year return on invested capital, and it's 14.3%. That's a check mark. Remember, guys, the capital within a business is either done through equity or debt. This is seeing what kind of return they're getting on that equity and debt overall. We want over 9%. It's 14.3. Okay, so far, 1X and 1 check.
What Paul's doing is we are using our 8-pillar analysis, these 8 pillars to look at the company. If you've only ever looked at a stock ticker price, bought it, and hoped it's gone up, this may resonate with you as actually looking at the numbers behind a company. Keep going, Paul.
So pillar number 3 is revenue growth. So I go to the income statement on our software. I go to 5 years ago, $35.8 billion. Last year, $109.5 billion in revenue.
I almost spit out my coffee.
I know. Look at 10 years ago, Seth. $3.9 billion. So guys, when I said earlier about a high PE is okay for fast-growing companies, this automatically makes me go, okay, I'm not as worried about that PE right now. So pillar number 4, net income growth. $15.2 billion to $40.3. Look at 10 years ago. That's $291 million they made in revenue. Guys, they do that every, what is that?
Day?
No, not every day. Is it every day? No, it's not every day. It's almost every day, though. You're right. It's pretty close.
Oh, my gosh.
No, it's like every other day they do that now in profit. So check mark there. Now, guys, pillar number 5 is one of the most important pillars, and people often ignore it overall. I know experts, quote unquote experts, who don't understand this metric. It's the shares outstanding. This is a silent killer. We want shares outstanding decreasing. Why is that? Because when a stock price is very expensive, would they rather take on debt or issue shares to finance their holdings? They'd rather issue shares because they're going to say, hey, all these suckers out there we're like the crack dealer at the corner. We want to just give them those shares. They'll buy it like crazy and we won't owe any money to anybody. It's way better to take on shares than debt when your stock's expensive. So what do? We go to the bottom of the income statement and we look at their average basic shares outstanding, 2.9 billion down to 2.81. So they're buying back shares. They are buying back shares. That's a check mark there.
I'm surprised about that one.
So far we have 4 checks and 1 X.
Yeah, you're right, Paul. All checks adjust for P except for just PE. So pillar number 6 involves their debt. It's a little confusing to our folks at home. Explain it to them, baby.
So guys, a company with less debt is better than a company with more debt. That's very obvious. Just like you at home. You and your neighbor have the same income, same house, same cars. But if they have $1 million in debt and you have 0, who's more likely to go bankrupt, right? So the metric I created, I go to the main page, the metrics page. I take their 5-year average free cash flow, which is right here, conveniently located on our software. I multiply it by 5. That's $107 billion, give or take. 107.5. I want their total long-term liabilities to be under this $107 billion. So,
makes sense.
Yep, very conveniently, I go up to the balance sheet on our software, go all the way to the bottom, $18.4 billion.
Oh my gosh.
So they can pay off. So guys, look at that. They can pay off all their long-term liabilities in less than 1 year of free cash flow.
And 5 times over if they wanted to.
Yeah, so guys, I don't even know why they have debt. Like literally, I look at companies like this, go, why do you even have debt?
Yeah.
Just pay it off. Like I really don't understand. I mean, yeah, they might sit there and say, well, it's really cheap. Yeah, but you're spitting out money like crazy. So guys, this is one of the best metrics to look at. And one other thing about this company, their cash on hand is $75 billion. Their total liabilities are 36. They could pay off all their liabilities and still have $39 billion left over.
Hey, Paul, explain why a company like this with all this cash wouldn't pay a dividend.
They can probably reinvest the money at a higher rate of return. And I don't like dividends. They're not tax efficient for you because you've already paid the taxes on the corporate side. And then when they pay you out a dividend, you got to pay another tax on that, your income tax, capital gains tax. What I'd rather have them do is buy back shares, give you a bigger piece of the pie because there's no tax liability yet. Unless some of Seth's friends in Washington get their way. So see how I threw that in? Friends. We're just going to lump Seth and everybody over there. So
seems right.
Yeah. So I don't like the dividend as much, but I know people like the dividend. But either way, I think Facebook's probably a few years off from that.
And they're doing a $50 billion cash buyback program.
Are they really?
Stock buybacks program soon.
Oh, I didn't know that.
They just announced it yesterday.
Pillar number 7, guys. Free
This
cash
is the
flow.
big
Seth, can you
mamma jamma.
please, you've been around me for so long, can you please explain,
Lord and Jesus, baby
first off,
Jesus.
how do we calculate free
Please
cash flow?
allow me to remember everything about free cash. So, cash from operations.
Yes.
Minus the capital expenditures, Paul.
And what do we use that free cash flow to do?
Buy back shares as they announce. We can make acquisitions like Instagram.
Yeah.
We can, I forgot
There's
already.
2 more.
Okay. We can buy back shares. We can make acquisitions. We can pay dividends, which they don't.
Yes.
And we can give the rest to the Democrats.
That's true. Or you can pay off your debt.
Okay, go on.
So guys, we go to our Everything Money software. We click the cash flow statement right here at the top, the tab. We scroll right here. Cash from operations less your capital expenditures. Now, one thing our exclusive software does that other people don't, I added this line right here to the cash flow statement
This
as
is
opposed
nice.
to burying it somewhere.
Yes.
We just go right here. 5 years ago, $15.74 billion in free cash flow. Last year, 35.8. That's a check mark.
Check, please.
Now, our final metric, guys. We want to bring value in at some point. So historically, a company should be selling for about 15 times free cash flow. But we're looking at a 5-year average. So we want to make a higher multiple because over time, that should be increasing. So we should pay a higher multiple for increasing free cash flow. So I look at the 5-year average free cash flow, which is also written right here. I multiply it by 20. $430 billion. This is a big fat X. The company's 867. So it's basically got to fall in half according to this.
Oh, boy.
Now, remember, this is a fast-growing company. The next thing we're going to do is we're going to use a stock analyzer tool to input all of our assumptions. So right here, if this is all too much work for you, the 8 pillars tab is right here for you. It shows you all our metrics, all of our 8 pillars immediately for you. Sethi, what do we have here?
Valuation.
That's it. And this is a very common theme amongst expensive companies that we love. They're just overpriced, but everything else is a check.
Paul, there are other expensive companies that you always say they can't grow at a rapid rate when they're this large. And then we pull up Facebook, and it sounds like they're very large and they're growing at a rapid rate. What am I missing here?
So that's what we're going to do in the stock analyzer tool. It'll allow us to pick our assumptions on growth to say, what should we pay today? But we created the software specifically because we were using another software before that cost me $500 a month. And our users kept saying, our subscribers kept saying, how can we get software that does all this for us? We have to wait for you to make these videos on stocks that we like. So we created the software. I invested hundreds of thousands. We made the software. Guys, this software is incredible. You get everything you saw here, news, stock analyzer, even look at all the things we're working on here on the right. A lot of stuff we're working on. It is incredible. Now, you get also exclusive videos every single day. You get a community of over 6,000 people who you can talk to about investing because so many people like Seth didn't know who to talk to about investing. They wanted like-minded people. And in the world right now, you can from all over the world talk about the same investment ideas. We're doing real estate analyzer tool. We're growing the software. This will be your one-stop shop for investing news, and it's only 90 cents per day. If you sign up at everythingmoney.com or Patreon, whichever one you like, Everything Money, the benefit of signing up directly with us is no sales tax yet, and you also get no double charge in the first month. While with Patreon, you do get that. This is all only 90 cents per day. Guys, if you're serious about your investing, increasing your returns by 1 or 2% a year using this software in the community will generate you hundreds of thousands and possibly millions of dollars extra in retirement if you have 30 or 40 years left to go. And if you don't have that, you'll still make a ton of money. We're 90 cents a day, less than a crappy cup of coffee. You get all of this. This is a no-brainer. Now let's go to the stock analyzer tool. The best part of this software, it'll tell you what to pay for the stock.
Yeah, so we haven't mentioned the ticker price at all, the stock price at all, Paul.
Correct. And now we're about ready to. So the first thing I do, guys, is select my analysis. I'm going to look at 10 years on Facebook. The number of assumptions I'm going to make. I'm going to make 2 levels of assumptions. So what it does here is it tells me the 1, 5, and 10-year historical numbers for all my assumptions I need to make. Okay? So their revenue is growing quite a bit. Now, I have to sit there and say, at $109 billion, are they likely to grow at 40% a year for the next 10 years? Guys, let's do that math real quick. If we do 1.4 to the 10th power, that means it would do $3.1 trillion in revenue in 10 years if it still grew at 40% a year.
Wow, so they're only doing $110 billion in revenue right now.
But for them to do 40% a year for the next 10 years would take them to 3.9 whatever trillion dollars. That's not going to happen.
It's not going to happen.
So I'm going to sit there and say, let me go low, because my job as a value investor is to make low assumptions. Say 15%.
Yeah, keep going.
What were you saying?
I was saying get low when the whistle blow, Paul, because we're very trendy, and I'm singing
I don't
songs.
even know what that means.
Well, it's from 5 or 6 years ago already.
Okay,
now that I've said it, I'm already in the past. So
embarrassed.
Yeah, this is awkward now. Keep going.
Okay. Share change, I'm going to go with keeping it the same, even though they've already announced the buyback, and a 1.5% decrease. Profit margin, guys, these guys are going to spit out money. Free cash flow margin, same thing. Now, PE. Guys, as the company gets bigger and bigger and bigger, it's hard to justify a bigger PE because it's harder to grow fast. So I'm going to give them a PE of 15 and 18. Same with the free cash flow. Now, return. So this is a big one. Why do I select 12.5% return on my money?
Yeah, this is not obvious for our watchers at home, Paul. I mean, obviously, if you put your money in the S&P, some people don't even know you get around 10%. If a financial advisor carries your money, you're probably going to make somewhere around 6 or 7 if they're really good at it. But we'd like to make more. If we're going to pick an individual stock with some risk, we don't want a standard return. We want more money coming our way. So
more money, more problems.
Right.
Or more problems, more money. That's what we want.
I see.
So I select 12.5% return. I very simply hit the analyze button. Now, guys, this is where stock price matters. It's currently 308. We scroll down. Guys, all green here.
Come on.
All green.
Check, please.
Yeah.
All green. What are you saying, Mo?
Well, I said on the morning show this morning, I was like, I'm opening a position in Facebook.
Did you open a position?
Shut your mouth when you're talking to me.
Did you really?
Yeah. And Paul, put in there for a revenue growth on what would their revenue growth have to be if they put 25% on the high side? On the high side.
Wait,
how many? What would that be per year?
Okay, so I think that's high. Let's see here.
I just want to see what that number
1.25
would
to the 10th. It would be It would be almost $1 trillion.
Yeah, that's high.
So let's see 15%.
Paul, I have to let you know that 2% of current teens rate Facebook as their favorite platform, and Facebook usage among teens has dropped from about 60% using at least once a month to the spring of 2016 to 27%.
But they love Instagram.
So yeah,
but they love Instagram.
So they
I keep
love
forgetting
Instagram,
that.
And they have WhatsApp. WhatsApp is international.
And they're doing this metaverse thing. This
Oh,
is
And they
their
have
new
Oculus.
thing.
Like, guys, I look at
He's announcing
Facebook.
it today.
I look at Facebook as the Google, Microsoft, Apple of the social media world.
And I get branded as Oculus all the time. Is this like a video game thing with the...
It is.
Yeah, it's
So
a virtual
that thing.
reality thing.
So my problem with that is I think that they're going to find a better way to go at this. My problem with that is you're going to have to. They're basically making you go and buy this $300-$400 tool. You know, they came out with the Ray-Ban
barrier of
glasses
entry
last month.
is and
And
okay.
those are $300.
Paul,
So-
more alarming. They found that teens on average spend 4.5 hours a day on social media.
Yeah, it's a lot. Hey, Paul, can I ask you one more question?
I'd love to answer.
For PE, for a company, yes, they're rapidly growing, but they're a rather new company. Wouldn't maybe you put your PE at 20, 21 on the high side?
Guys,
Couldn't it kind of justify it?
All I care about is what's the growth rate.
Okay.
I get what you're saying, but it's a $109 billion revenue business, an $800 billion value.
Mm-hmm.
To me, I think you got to be conservative on PE.
Okay.
This is my belief, guys. I'm trying to be more conservative because I have 9 businesses upstairs. I've got hundreds of units of apartments. I've got lots of ways of making money. So for me, I want to be very conservative to sit there and say, these are the companies I want. Let's look at 10% revenue growth. How does it change things? Okay, it drops a lot.
Yeah.
But 10%, this is a question of how conservative you want to be. I do think Facebook's going to figure out great ways to make more money on their advertising, and I think this is going to be a short-term scandal. I'm probably going to sell puts on Facebook from $300 all the way down to $250 at some points in the future to allow me to buy the shares at a cheaper price.
Facebook has been ahead of the curve on innovation for a very long time. I don't foresee that stopping anytime soon. So, plus Marketplace, it's a place to be. They pretty much took out Craigslist.
I would say so, yes.
Took down the socialists at Craigslist.
Yep.
Are people in the Bid and Ask Nation, that top trading tier as part of our community, are they trading? I'm sure that. Look at that, Mo. Look at that sweet. Look at this.
Yeah. So the thing that concerns me about this, I'm not concerned. I don't care what happens. This can go down to $200 for all I care. But it finally dropped below its 200-day moving average. That is the one thing. It was holding in there very nicely for probably 3 weeks, and then all of a sudden, boom, today it dropped below its major moving average.
But we're going to fill that gap, Mo, right there.
Yeah, that gap is definitely going to fill. Let's blow this up. So what I like about Facebook, and the reason that I started a small position in it today, you are at the bottom of your stochastic right here. So this is going to go one of two ways. It's either going to get on the bottom and go sideways for a very long time, or this red line is going to turn back up. And Facebook is one of the fangs, so this rules the market. This is what makes the market move. We are also sitting here at this very strong support level. So what I can see happening is this thing turning up. I am foreseeing this instance happening rather than going sideways. So that's the reason I started a small position today, and we're going to go from there. So if you want to learn more about this, come to the Bid and Ask Nation. This is the place to come. It's $1.50 more per day. You get all of the exclusive Everything Money software, plus you get access to me, which then you also get the Employed Trader series, the Trading 101 series.
Is this an Employed Trader or no?
This is not. Employed Traders, Apple.
Oh, don't tell them, Mo.
Well, I could tell them if you want to trade them.
All right, go
securely.
on.
Apple, AbbVie, Bank of America, Caterpillar, Lockheed Martin, Walmart.
And remember, guys, when it comes to trading, we don't care about their fundamentals. We don't care about the business. We care about the stock price and the movement of the stock price. That's it.
Yep.
That's what's so great about it.
If you want to come here and learn how to trade crypto to your heart's desire, this is the place to come. I will help you.
That is our take on Facebook. We will update you as this story progresses. Check the software below, join our community, and we will welcome you in, and you'll have all this information in the palm of your hands with our Everything Money app. That's our take. Final thumbs up, and we will see you guys next video. Appreciate it.